back in the Mag 7. Our Deirdre Bose is digging into that for today's Tech Check. Morning, Dee.
Hey, good morning, Carl. So the stakes are suddenly higher for its earnings when it reports later this month. Shares now positive on the year and up 80% from its 52-week low. Not much, though, has changed on the fundamentals. Q2 deliveries, of course, they were better than expected last week, but Tesla's still facing more competition than ever, which is still weighing on growth and profitability, making it look like the one that doesn't belong in this group of mega caps. Of the 7, it is the only one expected to see revenue growth shrink in the current quarter and earnings growth even more dire, expected to decrease 34%. Now take a look at Apple. It has the second worst expected numbers this earnings season of this bucket, but notably it's also seen a resurgence in share price over the last month. Second best performer after Tesla. Chalk it up to being seen as AI laggards. They're still show me stories. The narrative, though, is turning more positive. Apple shares have turned around since laying out Apple Intelligence, that's its AI strategy, at WWDC a few weeks ago. Elon Musk, meanwhile, has been or continue to try to rally investors behind Tesla's AI and robotics bets, but he'll really need to lay out that strategy and NVIDIA's role in particular when it reports on July 23rd. The company has bought and deployed tens of thousands of NVIDIA GPUs over the last few years to build powerful AI infrastructure for Tesla and for its self-driving aims. Last month, though, Musk confirmed our own Laura Kolodny's reporting that he redirected a Tesla batch of those GPUs to X and xAI. That's two of his private companies. So if, as Musk claims, Tesla is fundamentally an AI company versus a car company, investors are going to be looking for updates on how the AI strategy is progressing, and in particular, that GPU deployment. What's going to Tesla, what's going to some of the other companies. It's also notable, guys, we're 1 month away from the Robotaxi event on August 8th, which Wedbush sees as, quote, laying the yellow brick road to full self-driving and an autonomous future. Certainly here in San Francisco, it feels like that race has new urgency. Waymo has now been open to everyone for more than a week, and it's been delivering tens of thousands of weekly trips already.
Well, it looks to me like the financial media is trying to push down Tesla stock a little bit so that smart money can enter. Just kidding. Who in their right mind would look at Tesla and see solely a car company and leaving out energy and artificial intelligence and robotics now? Keith Fitzgerald went on CNBC, gave his input on the economy and several companies, including NVIDIA and Tesla. In less than a minute, Keith Fitzgerald was talking about Elon Musk and his knowledge. He was mentioning that Tesla as a business is still in its infancy and that Tesla will double and even triple in the next 2 to 3 years.
And Keith, I should mention as well, you're still bullish on Tesla, thinking this could be a $300 stock next year.
Yes, I am. I think this stock is going to double or triple, maybe even more in the next few years. And again, we're early innings. Anybody who's thinking about this just in terms of cars is very smart, but I would encourage them to broaden their horizons significantly. This is about power. This is about robotics. I think it perhaps is the best undervalued AI play on the planet right now. And love him or hate him, Musk knows what he's doing.
Looking at Tesla as a car company, leaving out all other components is a huge misunderstanding and the core mistake that was made by 95% of analysts who have missed the boat. Tesla is beyond vehicles. By 2029, we might look back and realize that Tesla might have been the most undervalued AI stock. The market is giving Tesla its price instead of the potential value. When Keith was asked if he's still thinking Tesla could be a $300 stock, he said he believes that the stock is going to double and triple, or maybe even more in the next few years. He also mentioned that anybody who is thinking about this, and just in terms of cars, is very smart, but he would encourage them to broaden their horizon significantly. This is about power. This is about robotics. Tesla is the best undervalued AI play, he added. You might love him or hate him, but Musk knows what he's doing. He was telling the interviewer that Tesla will not only go up by 20%, Tesla will increase by double and even triple. Keith is giving his analysis saying that Tesla will increase 100 to 200% within the next 2 or 3 years. FSD, robotaxis, robotics. The vast majority of investors still fail to understand that Tesla is not just a great car company. Tesla is probably one of the best AI players in the market right now, and they're not priced accordingly. Hey, if you like this kind of content, please like, subscribe, and turn on notifications so you won't miss any updates. Thank you. Humanoid robots is going to be the next wave of the industrial revolution and AI. We're heading into robotics as the industrial revolution continues. Robotics is going to revolutionize the way we manufacture, the way we operate, but of course, most of it is obscure and misunderstood. And we honestly don't really know how big this is going to be. One thing is certain, whoever figures out the code to building functional, cost-efficient, scalable humanoid robots that can be utilized in manufacturing and in everyday operations will dominate the market. Tesla is one of the leaders, yet the stock doesn't reflect on it. Tesla increased by 45% over the last 30 days. This could be scary for investors, yet if you look at the big pictures and zoom out, you can see that Tesla is still down 6% from 1 year ago. And if you look at Tesla's charts from 2022, Tesla was at all-time highs. A lot can happen with Tesla's earnings call and actual revenue numbers at the end of the month. We are also anticipating Tesla's Robotaxi event on August 8th. And with Elon owning 25% of Tesla, it won't be so easy to manipulate by big institutions like BlackRock and Vanguard and other big names. All of these will influence the stock price. If you are a long-term investor like me, we'll wait it out and take opportunities as they come. But if you're planning to trade these events, I wish you good luck. Recent developments. Robotics, energy, and FSD will probably be worth a lot more than the current entire market cap of the company. Just robotics, FSD, and energy is maybe another 3 trillion in market cap by the end of the decade. Full self-driving, autonomous driving will be a brand new market that is still unknown territory. Some believe that the share price of Tesla should be around $500 today and might be heavily undervalued. And if Cathie Wood is right with her price prediction of $2,000 for her bear case, $2,600 for her expected value, and $3,100 for her bull case, Tesla will be on the run for some time. I hope you enjoyed this video, and I will see you in the next one. My name is Claudia, and goodbye.